Hi guys, welcome to another episode and real estate investing. That is, we have talked about real estate investment, real estate agents. So many things tied to real estate investing, right? And because everyone hustles, and real estate investing is something that we time and time again we encouraged all our viewers to go into. We're in a different situation at this point as a country, as a world, because of the pandemic and because of all the bad things happening around us in the country. And there are so many fluctuations, interest rates, and real estate market. And there are so many changes happening. And you might be wondering, like, is it still a good time to be on the lookout or be on this whole real estate investing side, or what would be the best time? Is this a good time? Is this not? And if not, what would be the best time? What are the things that we should think about? And all those, questions raging in your head. So we want to dedicate this episode to discuss about that. And Venkat, my question is this a good time to invest in real estate?
Right. It depends on the place where you are right now, right? So in 50 states, I would say there are some. It's really high. The price of the houses these days are really high. Like sometimes it's like 10-20% higher than the market value used to be. Like maybe 6 months ago,
Yeah.
it was lesser. Right. Also, it's a summertime, right? Normally the price goes up like this curve, like a bell curve, right? So springtime is low, and the fall and winter time is lower price, but the summertime is like kind of higher, summer and fall. But there's so much of compounding factor right now, right? There's so many other factors being influenced. That, for example, the interest rate, lower interest rate. So when the interest rate goes down, the house prices goes up little bit. There is some proportion, but people like when the interest rate goes down, people try to buy more, right? Because the lower rate they want to lock in. It's historically lower rate right now. I think some credit unions or banks giving like less than 3%. You can lock in that for 30 years, right? Conventional loan.
So because of the low interest rate, people try to buy more houses, right?
More
And how
houses.
does it affect like the whole?
Yeah, the demand and supply, like, there will be more demand, right? Then the supply is actually right now low because nobody wants to move out right now. The sellers, they were planning to move out and they lost job, right? Most of them lost job. They will stay home, and there's a mortgage forbearance, like you can postpone your mortgage payment, all those things happening, and you can even you don't need to even pay your mortgage for a few months.
Yeah,
There are a lot of benefits coming from the governments, and all those things uh, affects this market. It influences in that way, that not like if I wanted to sell my house, if I was planning on selling this summer, but I don't have other place to go because it's a low, not many supply out there, right? Because of that, there's high demand. Because of the high demand, the sellers are keeping the price high. So it depends on the market, but there are some houses. I look up Redfin, mostly Redfin, and I'm also looking at other real estate sites, but Redfin is the major one that I look up. I have a lot of alerts into it built up. Just you can just put a
Redfin is
zip.
very user friendly. Just so you
Yeah, very
guys.
user friendly, and you can just put up all these alerts, and then you will get those you will get those listings to you, and
Right,
it will tell you hot home based on the data analytics behind the scene, right? It'll hot.
right,
It's either hot home, or is it going to sell quickly? So, and also it'll show the price history in the bottom, so you can
correct.
kind of see what is your price range. You can set that alert in there, and then get those listing to your email. Then you'll be able to see, is that the good price for you. Like, there are some houses, I would say around 20-30% houses are still in the normal price range. It's a very good investment if you want to do that. This will be the right time, but you need to find those 20-30%. It's needle in the haystack kind of thing, right?
Right.
uh, but you can find it if you dig deeper and just put up all those alerts, and as soon as it comes to your email, people are jumping in right away. So you have to put an offer right away, have the pre-qualification, have your real estate agent ready,
Right.
everything ready. So you just jump in and put an offer the same day.
So you it's a hot market and it's a seller's market. Because of
Right.
that, homes are being sold really quickly, and you might have to go for more than the listed price. That's what you're saying, right?
Multiple offers. Sometimes, yeah, for some houses, mainly on the in the range like 100 to I would say 100 to 250,000. That's mostly like you get multiple offers. So once you cross like 300,000, you do get multiple offers, but very few multiple offers.
And with the low interest rate, right? And this being the seller's market, and what would you suggest, like if someone wants to invest in real estate? There are the previous episodes. One of the previous episodes we talked about you have to find your niche. If you want to invest in townhomes, focus on that single family that. And being that 100 to 250 range, being that range the hottest, right? And with multiple offers and interest rates being low, what would you suggest? Like if someone wants to invest right now, should he go for townhomes, and what would be the price range and the timing? You want to add some color into it?
Right. Yeah. I think you have to look up the rental value on that. Like, let's say if you are going to be investing as a rental house, right? Look into Zillow. Zillow is good for rental. It'll show you the how much you can rent for. It's almost, I would say, 80% accurate the rental income they give you.
Do that.
So if you like the neighbor, like I would say, pick the zip code, pick the area first, and focus on that. And then I would say maybe a neighborhood, few neighborhoods within that zip code, right? So you maybe 4 or 5 neighborhoods within 1, 2, 3 zip codes, right? You just pick those things, and then the how much is the rental income per square feet. Like normally it's a $1 per square foot, right? So that is going to be your value. That's going to give you a good return on investment. Like
Okay.
for example, like you're getting a townhome. It doesn't really matter. I would say go with townhome, but it not with very high HOA, right? If it's $300 per month,
Right, right,
don't, and then you can only get $1,000 rent on that, right?
right,
You are already paying like $300 per month HOA fee, and then you may get $1,000 rent, but your mortgage probably is around 700. So you don't have anything left. I would say you have to have at least, like, for me at least, I want $500 cash flow. And for you, maybe you're investing in 100, if you do that, I would say at least like $200 cash flow. If you're putting, like, you need to see how much is cash on cash return, right? If you're putting let's say $10,000, and you're getting the cash flow every month is like, let's say $100, right? $100 you're getting, and then it's $1,200 in a year, right? So you put $10,000, it's almost like 12% your cash on cash return,
right.
right? So that's a great one. And anything more than 7% is a great one. Anything more than, like, if you can get 7% cash
Right.
on cash return, like even you get like $70 a month on the $10,000, $70 cash flow. Your
Right.
rent is, let's say your rent is 1,000. uh Everything, after everything, your mortgage, your HOA, everything, your leftover is $70. I would say $100, so you may have some buffer.
Right.
That's like 7%, right? If you only put $10,000.
So that you made a good point, because people tend to forget about the HOA fee, right?
Right,
And
there's the HOA fee, and then you also have to have some buffer, like you repair and other
yes,
things, in
right,
like
right.
10% you have to put on that.
And also someone like me, like I would like to invest in North Carolina, whereas I'm outside of North Carolina, and I cannot manage it uh, by myself, being an outsider, right? Out of the state. So you might have to even hire a management company, and for which you also have to pay some amount. So HOA, management fee, and the buffer for maintenance. So all that should be considered when you're going for something, for investment property. And when you're the other question I have is it like it's usually when you're going for your main home, down payment is, you can go as low as 3% or 5% sometimes, right, for FHA loans.
Yeah,
But
FHA loan, you can go that. Even like USDA, like USDA loans are there, but that's not available in the big cities. You have to go a little further down. And the USDA, I think, is you don't need to even put any down payment. It's like that.
okay, okay, but
There
but
are.
when you're going for an investment, it's 20%, and that effectively.
It depends on the lenders. It's like some lenders that these days they are asking for 25%, 20,
Okay.
25%. But
So it's either 20 or more, though, right? It's not.
yeah. But you may find a private lender. Sometimes they don't even need anything.
Yeah,
But their interest rate will be like 6%, not going to
that's
be
the thing. Okay, so you get
2%.
something from this, and you have to forego something.
Yeah,
So
but
that's the other. Sorry, what's
I
that?
would add one more thing on that, like on the investment. What kind of investment? Like I would say, if you are in out of state, right? Buy a turnkey investment, something called turnkey.
Investment.
That means it will have everything in there. Like for example, there is a neighborhood here. They built a house. It's a spec homes. Like they already have all the defined homes. It's not like you can go and modify things.
Mm-hmm.
It's a spec homes. Like buy a spec homes and new homes.
Homes.
Those are like a cheaper than the customized homes, right? Like you can pick and choose different colors, different things. Those, it doesn't come with that. It's a spec home they already have. They probably already built it, but it's a turnkey. Some of the name like a Meritage Homes, for example. I don't want to I don't want to recommend somebody, but Meritage Homes or some other home builders, they actually put the refrigerator, washer, dryer, everything in there. It's a turnkey. You don't need to even show up here. You just have to send the money, and you can do everything electronically.
So what would be the initial down payment? Is it 20% still,
Yes,
or
20 to 25%. If you do, like, let's say 20%, you are getting 3.5% for the investment, right? If you do 25%, the 5% more, what
Mhm.
happens is your interest rate will become like 3.
Okay? And
It's
what's
like
the
a
difference
lot of
between turnkey and the
less.
other investment properties? Sorry, I didn't catch that part. What's the difference between turnkey properties and turnkey investment?
Turnkey properties is like brand new, mostly like brand new built, right? It's going to last like almost all the homes last for 60 to
Yeah,
100 years, right?
right.
But
Okay.
for it has a 10 years warranty, and 1 year warranty the first for everything, 10 years structural warranty. All those things are there, so you don't need to worry about something going to go wrong.
That's why you said if you're out of state, it's good because less
Right,
problems, right? Because they're new. Is
right,
that the
right.
point that you want to convey? Okay.
That's exactly, yeah, that
Great
point.
point. Great point. Fantastic. I'm glad that I asked that question, and I can educate myself and also the others. I'm glad. Well, that's some, we wanted to just give you guys a glimpse of what's happening and what would be the best option at this point, given the current situation. And we are planning to talk a lot more than this, but this is a very quick video that we wanted to put it out there because given the current situation. So if you have any questions, please feel free to drop a line on the comments box. Venkat, you have any final thoughts on this?
Just one thing, like what happens is, like, if you buy, don't be afraid to buy a rental property. Maybe if you don't want to go higher price, just buy something lower.
Mhm.
It's going to always appreciate. Like, don't look for 1 or 2 years. It's like keep it for a 10, like think 10-year plan, right? Buy it for 10 years,
Yeah.
and that way you buy like 5-year-old, something like that. Don't buy anything older than 5 years. The better to buy new ones. If you find a deal, like something away from the cities, those are going to be lesser price, and then just don't afraid to buy that. You're going to get, once you get that into it, right? You can get more. It's actually become easier because the lenders will see you already have an investment property. They
Right.
will lend you more money. Like I would say, every year you can buy one. You will have, within like 2-3 years, like when you have 2-3 investment property, your portfolio actually looks much better on the lender's perspective.
Right.
So because you have multiple lender investment property, you're managing it. So that's how you start. If you are scared of taking a little risk in the beginning, you cannot buy it. And you have to
Yeah.
buy one. to
Yeah,
get more.
yeah, exactly. You have to build your portfolios to the more properties you have, better from the
Interest rate
lender's
too.
perspective, right? So
Right,
yeah,
right. And you get more income, more tax climbs, and there are lots of other benefits to it. We will talk about it in a different video on that.
fantastic, great discussion. Okay, thank you so much, and until next time, it's goodbye from us.
Thank you guys for watching.